There's a lot of people that would like to buy a home, but they think to buy a home they have to put at least 20% down and they don't have any other options. Today we're going to talk about the different types of home loans and the different benefits of each. And if the down payment is what's holding you up from buying a home, we're also going to go into home down payment grants and no down payment loans. If you're paying rent, I cannot stress enough how important it is to buy a home sooner than later. I don't know if you've ever heard of Dave Ramsey, but Dave Ramsey has a nationally syndicated program that focuses on getting out of debt and using your money wisely. I've always respected Dave Ramsey, but I always cringe when I hear him say not to buy a home unless you put at least 10% down, and he encourages everyone to save that money to buy a home. The problem with that advice is that the price of a home generally goes up faster than you can save the money. Your goal may be to buy your dream home at first, but it usually makes more sense to buy something lower priced at first, like a condo or a townhome, maybe an older home. Your monthly payment on this home will never go up, and while your payment stays the same, the value of the home goes up as you pay down the loan. In most cases, you can sell that lower priced home in a couple of years at a profit, and then you'll take that equity and put it into a new home that's closer to what your dream home is. The first thing that you want to do when you get off this video is to apply for a mortgage loan to see where you're at. You'll go to the home ownership company's application site, yourhomeownership.com, and fill out an application. The link for this is also in the video description. When you get into the application, it's going to ask you to upload some documents, such as W-2s and bank statements, but for right this second, hold off on uploading anything. The next thing that'll happen is we'll give you a call and let you know where you stand and what options you have. So let's get into the different loan types. The most common type of loan is what's called a conventional loan. A conventional loan is any mortgage loan that's not insured or guaranteed by the federal government. These loans are funded by private financial lenders and then often sold to government-sponsored enterprises like Fannie Mae and Freddie Mac. The down payment for a conventional loan starts at only 5% down. Other types of loans are the loans that are insured or guaranteed by the federal government, and they're known as FHA, VA, and USDA loans. And then lastly, you have what's called a non-QM loan, which is a loan that you'd look into if you're a good borrower, but for some reason or another, you can't qualify for one of the previous loans. The FHA loan is a government-backed mortgage insured by the Federal Housing Administration. The great thing about this loan is that the down payment on this loan starts at 3.5%. It makes it easier to qualify for a loan by accepting lower credit scores and income and higher debt-to-income ratios. The perceived bad thing about an FHA loan is the rule that you'll have to pay for mortgage insurance for the life of the loan. You may not know what mortgage insurance is, but mortgage insurance is a monthly fee that you pay on your mortgage until you have at least 20% equity on your home, and then the mortgage insurance can be removed once you hit 20%. On FHA, mortgage insurance cannot be removed. The good news is that mortgage insurance has come down in cost over the past couple years, and you can refinance into a conventional loan when you hit 20% equity on your FHA loan. If you find a great deal on a fixer-upper, FHA also offers renovation loans where you can also borrow money to fix up your new home. The VA loan. A VA loan is a top benefit of military service for eligible veterans, service members, and qualifying surviving spouses. It allows you to qualify for a low-cost mortgage when you're looking to purchase or refinance, even if your credit isn't perfect. VA offers no down payment loans and also renovation loans. USDA loans or rural loans. USDA loans are a great option and they offer no down payment loans. In northern Utah, they're available in most areas except for Salt Lake, Davis, and Weber counties. Most of Utah County is unavailable, but you can get a USDA loan in Eagle Mountain, parts of Saratoga Springs, and most everything south of Payson. Another popular area for USDA loans is Tooele County. You can check eligibility of an area for a USDA loan by Googling USDA eligibility map. And now we come to the non-QM loan. And what the heck is a non-QM loan? A non-qualified mortgage or a non-QM loan does not conform to the consumer protection provisions of the Dodd-Frank Act. The Dodd-Frank Act came into effect after the 2008 housing meltdown, and if you're really interested, you can Google the Dodd-Frank Act. Applicants whose incomes vary from month to month, or those with other unique circumstances, may qualify for these types of mortgages. These are people who are self-employed, they're business owners, they're people with high levels of debt, they're people with low credit scores, they're real estate investors, and they're also freelance workers with varying incomes. Two more options to buying a home are lease-to-own options and seller financing. I am not a fan of lease-to-own options as they seem to have a high failure rate. Both of these options generally have a high down payment, as most of the owners usually want at least 20% down, but the down payment is negotiable. With seller financing, you'd be in a situation where you're not able to qualify for a loan today, but you would be able to qualify in the next couple of years. Maybe you're having problems qualifying for a mortgage because you just started a new business. In this situation, the owner would most often sell you the home on a note of 2 to 5 years, where you would make payments to the seller for 2 to 5 years, and at the end of the note, you would refinance the home, and the seller you bought the home from would have all his money. One last thing that can help you buy a home is first-time buyer programs. The definition of a first-time buyer is usually someone that has not owned a home in the past 3 years. The first-time buyer programs include additional loan options that do not require a down payment and grants given out by certain cities. For instance, West Jordan City has a grant that'll give you up to $10,000, and they will forgive you of the $10,000 if you live in the home for at least 5 years as your primary residence. There are many other grants available. You can find out what down payment programs you qualify for going to downpaymentutah.com. For more information about buying a home and the rebates and mortgage credits offered by the homeownership company, go to the link in the video description. This is Mark Yates for the Homeownership Company.